Hey, good morning. My name is James Manning, and I chose Cheniere Energy for my financial analysis project. Just from the first couple slides, we'll go over kind of a high level of the international and national issues and economic factors that could sway or how Cheniere is affected by these. So I won't dive deep into the United States and all the different monetary policies and fiscal policies. That's a different report, but just from a high level, Cheniere exports LNG worldwide. So you can imagine that any kind of issues on trade, on war, on terror, on targeted attacks, on OPEC and how they change the pricing or the inventory of oil, all of that greatly sways how this company performs. Just because any change in the price of oil or the price of gas, which their focus is on gas, of course, but it still goes hand in hand, is going to change their expenses, their costs, their price they can ask for a given cargo, and it also changes on trade on how much is going to be taxed on it as well. So just starting off from there. So again, high level economic analysis, international, national. United States economic and financial situations will have close ties with the political and international factors. The U.S. has held a 2% GDP and has remained fairly stagnant on this growth due to the political scene. We saw this in 2016 when President Trump took over. All the concerns, the economy bounced back, and the stock market's been hit some of the highest numbers it's ever had. So clearly, the economy's still doing good, even with the concern over the political side of it. We're starting to see that again with the 2020 election coming up. So seeing dips or holds on the stock side. Just over concerns, but we've also got the trade war going on, which I'll touch on in the next slide. But as far as economy-wise, the current unemployment rate of 3.6% still remains among the lowest in recent years, which shows the economy is still holding strong despite the market concerns. There's also targeted attacks on Saudi Arabia that have happened just recently, which impacts the price of oil. And again, natural gas and oil a lot of times go hand in hand on the prices and how they sway just because they come from the same pads. A lot of the companies are in the same market, so when they split it up, it's going to have a direct impact. The growing concerns over the impeachment status and China trade war have halted any potential growth in the market. This has been going on for a while. Every once in a while, they keep kind of hitting a small agreement, but not a full-on agreement on the trades, so they end up the stocks kind of bounce back. The concern goes away a little bit, but we're still on the edge of it. President Trump just signed some sanctions or some support for Hong Kong, which China now just said they're going to retaliate in some form or fashion, but that hasn't been pushed out yet. This just recently came. So again, we're going to see a dip in the stocks. The market it's going to kind of hold or drop off a little bit until this is figured out. But so far, it's been holding pretty well. The political environment strongly sways the U.S. economy, which is in a constant state of controversy, also due to a current impeachment trial going on. With all that being said, the current president has improved the overall economy but caused a larger separation in parties, which deters the market from growing as well. Overall, the volume of stock market has remained high, but the stock took a dip in 2018. It's shown some recovery recently in 2019. Most of my numbers are 2014 to 2018, but I'll go over a little bit of the current, which is the stocks have maintained a steady state, which indicates good financial condition despite the current trade issues with China, the political scene. The bond markets also experienced steady growth and increased in value. If a trade deal can be completed with China, then the market should stay optimistic. As far as the industry I chose the pipeline transportation industry specifically. Cheniere kind of spans outside of that because their transport through ship, through LNG worldwide kind of goes outside of just the pipeline, but they because they kind of go over a couple of different ones, I just specifically drilled in on the pipeline transportation because they also have some assets on that portion of it. So you can see the GDP, the shares have gone up from 30.2 billion to 46 billion in the last 5 years. The industry growth rates is higher than the U.S. and world GDP. As you can see, 11, 17.5, and then as late as 2018, 10.9%. So the growth rates have been outstanding. So we'll go ahead and drill in a little more on Cheniere itself. Cheniere is an international energy company headquartered in Houston, Texas, and is the leading producer of liquefied natural gas in the United States. They basically transport this gas to their LNG facilities where they freeze the product, load it on cargo ships, and then transport it worldwide. Cheniere's operation, construction, development also supports energy and economic development across the United States and is the second largest LNG producer in the world. We'll watch a quick video over Cheniere. So that was a quick video from them when they had their first shipment in 2016. Just video real quick. So they had a quick clip of that. Alright, we'll see if this video will work a little more. Okay, so moving on. Alright, as far as a company, their analysis, their strategy, their specialization, of course, is in LNG export. They've delivered LNG to 32 countries and regions worldwide. They led the way in LNG export for the lower 48 United States of the United States. They're years ahead of the competitors, securing long-term contracts and operational readiness. That's because as they started as a company, they ended up were on the import and regasification. They quickly realized that with the technological advances, that natural gas was going to become more available in the United States and then we weren't going to need to import it. So they started the process back in 2010 of turning their facility into an export facility, which put them years and years ahead of the competition. So that's why they've got the advantage in the market right now. The cost strategy is to purchase natural gas from different markets and process the natural gas at one of the company's 2 facilities. They got one in Sabine Pass we watched the video over and one in Corpus Christi. Their price strategy is based on long-term contracts at lower cost. Extra capacity is then marketed on short-term basis dependent on demand and market capabilities. The current president and CEO is Jack Fusco. He came from Calpine Energy as the CEO there before 2016. Michael Wortley is the CFO and Tom Bull is the CAO. Of Carl Icahn and Icahn Associates is the largest shareholder at 8.41%, followed by Vanguard and Fidelity. You can see their employees from 2014 have grown from 642 to 2018, 1,372. So you'll see this on expenses as well because their operational expenses have gone up drastically. As far as the life cycle, I already kind of briefly went over this. They completely changed their positions from regas to LNG export. It's now considered a business that is building and growing still, and they recently commissioned their second facility in Corpus Christi with several trains to follow. Analysts still predict the price to increase 35% over the next 12 months. Surplus in natural gas will keep the price point low for cost. Short term, this company is still a good buy based on future forecast and limited competition. Long term, there's going to be some issues because there's several companies right now on the horizon that will increase the market and competition for LNG. Sempra Energy recently commissioned their first cargo from Cameron LNG, but all the rest of these companies are still a couple of years out. So competition's not really there at the moment, but it's going to pick up a lot over the next few years. Just a simple balance sheet, you can see their assets versus their liabilities. Liabilities still hold pretty high just because they're a growing company and they've got so much invested in their current structure. Their income statement, though, you can see revenue of $267 million in 2014. It's gone all the way up to $7.98 billion in 2018. So their costs have also gone up with the increase in operation is a big part of that. But their net income, again, from 2014 loss all the way to 2018, drastically changing with their first export starting in 2016, and then revenue, of course, generated a lot since then, just because they're now exporting. They're actually going through the process, and they have a constant revenue stream now. This is just a quick deal of what we just went over there from their non-current to their current assets. And then, of course, their income statement. You can see their revenues on Series 1, which is the blue line, just took off. And again, that's because in 2016 they started exporting. Same deal with their net income going up. This is going to be their credit profitability and per share ratios. So cash flow per ratio, you can see, has gone up. The return on equity ratio, again, 2018 has gone up. So again, everything's pointing there from 2014. Of course, they were on the negative side just because the company was just starting, but has since then has shown it's profitable and it's doing well. The price payout gross ratio, so the growth and sales ratio, again, you can see from 2014 to 2018 is the one I focused on here. It's just going up. So payout ratio, no dividends paid so far, so that's all going to be at 0. And earnings yield ratio at 0.03 in 2018. So again, everything growing. I've got more in my financial analysis report to go over, but as far as this portion of it, my conclusion based on all those numbers again is that it's still a safe bet in today's marketplace. The company has a solid lead and advantage over the competition. The future still looks bright due to increased natural gas supply in the U.S., driving costs down. Due to the current edge and global need for natural gas, I believe Cheniere is still a safe bet for the foreseeable future. Long-term outlook may not be as bright due to increased competition, but short-term over the next several years should still see a solid revenue base and increase in the market price. This wraps up my analysis over Cheniere. Again, I think they're going to be a solid bet and a solid company for at least two more years. Competition is going to pick up a lot, and again, with the natural gas industry, it changes every 5 years on the landscape. So we'll see how the natural gas goes from there. But as of now, this is a pretty safe bet. Thank you.